Hello everyone, this is the weekly market recap and this is Ahmed Saleh. Alright, so the key messages for this week is that we have the market stagnating. For the last 7 trading sessions, the market is stagnating, going nowhere. Why is that? Because we lack any news to push the market up. There was no news in the last week except the results, so market is stagnating where we are, and because of this, the market direction most probably is going down in the coming weeks. Now, next week we have 5 of the Mag 7 that will announce results next week, so it's going to be a very important week. That's the only thing that can drive market up again. And the US election is heating up. We are just 10 days ahead of the results. So it is taking all the news, and some investors are very worried and they don't want to be in the market during the election. And that's why it's adding to the probability that market will go down. So that's why I'm recommending to start offloading some of your position because of the volatility that we expect in the coming weeks. So this is the overall market recap. If you want to listen to the details, continue with me, but this is the overall summary. Okay, so let's continue with the last week recap. So last week was the fourth week of October, and we had it was a negative week overall. S&P -1%, Nasdaq is flat, S&P equal weight is -2, and Russell 2000 is -3%. Okay, we are seeing a lack of the small cap represented by the Russell 2000, and this is because there are some good economical news which is saying that the Fed will not reduce the rate as it was expected before with the same pace, but it will slow down because inflation is still going to be stubborn because of good good news in economy. So that's why the Russell 2000, we talked before that the small cap always depend on loans to like expand their business, and since the interest rate is going to be high, then this is mean that they are not going to expand business with the same pace. So you can see that October month to date, the Russell 2000 is lagging -0.7%. It's the worst performance, and Nasdaq is the one who's getting the attention, and that's mainly because of Nvidia. So Nvidia is like approaching, it actually broke the all-time high of 138 and now is approaching the second all-time high of 144. And that's what's driving the Nasdaq, which is mainly represented by technology companies. And that's what's driving the Nasdaq up. The other news that happened last week is that we had the Goldman Sachs report. So Goldman Sachs just mentioned that the next decade is gonna be a lost decade. What does it mean? It means that the average return for the stock market is going to be about 3% for the coming 10 years. That was what Goldman Sachs said, and that was one of the reasons why the market didn't go up. Some people sold on this news. Whether it's true or not, we're gonna see that. We don't know. We cannot read the future, but that was one of the reasons why market didn't go up. Tesla results came very good, and you've seen Tesla went up by 20% in the first day and then 4% up to 3% in the second day. So it was a very good report. But actually yesterday on Friday, the media was full of news about Musk making contacts with Putin during the war, after the Ukrainian war. He made some contacts with Vladimir Putin. And some news was saying that they want to put him under investigation because he connected with a war criminal and. So he didn't confirm or deny this news, or it was blessed by US, but my personal opinion is that Musk was supporting Trump like in every news conference call, and that what put him in the trouble. So I think some of the people, especially that media, doesn't like Trump, and all the media is showing like that Kamala Harris is winning, which was the same as when Trump won the election. So he got himself into politics, and now he's. I'm thinking he's gonna pay the consequence for him getting into politics and supporting Trump. So it's not a coincidence. I don't think it's a coincidence that this news is coming with like at the same time that he's supporting Trump. So this was a little bit of negativity. We have to make sure to be careful about this news um, and see how it's gonna progress in the coming weeks. All right, so that's basically what happened last week. Now, there are some watch out signals that we need to take care of. These watch out signals are appearing on the S&P 500 and the Nasdaq as well. And let me explain this to you. There is something called like negative diversion. Negative diversion is happening when the stock or the index in this case is going up, but the MACD is not following this in the histogram or on the lines. So let's explain this. You can see in the previous weeks, the S&P was going made a top. I present this by number one, and then made a higher top, number two, and then made a third top. Okay, so the S&P was going up. But look what is happening to the histogram here. The histogram here has a top, and then a lower top, and then a lower top. This is what we call a negative diversion. The stock or the index is going up, but the histogram is going down. The same as on the line, the blue line here, it is not going up as aggressively as this line. It's almost flat between the second and third. So look what happened after that. We had the correction, the famous correction that we had in July. So this phenomena is repeating again now. Look again here. This is top number one, top number two, top number three. Look at what's happening to the histogram. This is the first top, the second top, and the third top. The third top is lower than the second is lower than the third. And look at what market is giving us. It's giving us an exit signal. All right. So this is a washout. The only thing that can turn this around is the result of the Max 7 that we are going to see next week. If the results is not good, then the MACD signal will be confirmed and the market will go down. But if the Max 7 results, 5 of the Max 7 results are giving results next week, if the results were not good and we're not able to lift the market up, then most probably we're going to see the market going down. So this is the first negative signal that we have seen. Let's look to another negative signal, and this is coming from finviz.com, and finviz.com is giving us 4 signals, and the 4 signals are negative. Let's look at them one by one. The first signal is called the new high, new low. So these are the companies that are making new highs, new 52 weeks high every day. So this is on the 16th of October, and you can see here that the new highs, the companies that are making new highs are 871, which is represent 91%, and the companies that are making new lows are 8.7%. Okay, look at what's happening from the 871 that we had on 16th of October. It went up, then it's going down, 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 down. All right. So this is the first negative signal that we don't have companies that are making new highs. What does it mean? That the market is not going up. The depth is not there. Okay. Signal number 2. This is a simple moving average 50. And let's look at the companies that are above simple moving average 50. So it means they are on the short term, it's going up. It was about 70% on 16th of October. And look what is happening. It went down to 67, then 61, 59, 54, 54, and on Friday it was the lowest of 51.7. So the companies are going below their simple moving average 50, which is a negative signal. It means in the short term the market is going down. Okay, third signal. The third signal here is about the same thing as a simple moving average 50, but now it's a simple moving average 200. again, the number of companies was about 70%, and look what is happening. It's going down to 66, 63, and 60, 64. So the number of companies making like going above their simple moving average is now going down. This is the third bad signal. Okay. Now the fourth signal, which is also bad, that the 50 number of companies on the 50-day 50 above their simple moving average is 51%, and the number of companies above the simple moving average 200 is 6,200, which is 63%. So the number of companies below the above the simple moving average is below the number of companies above the simple moving average 200, which means what? That the short term, the number of companies in the short term are lower than the number of companies in the long term that's going up. So this means the market is going down because the simple moving average 50 will push down the simple moving average 200 because the number of companies in the simple moving average 50 is lower than the number of companies in the simple moving average 50. So the short term will push down the simple moving average 200, and both are going down. So four negative signals with the MACD is a negative signal as well. So the only thing that can change this will be the results of the Mag 7 next week. Okay, watch out. All right, so let's look at what is expected on the next week. Next week, we have the Mag 7 result. That's the highlight of the week. We already had Tesla. And then we will have on Tuesday Alphabet, Google, and then Microsoft on Wednesday, Meta on Facebook on Wednesday, Amazon on Thursday, and Apple on Thursday. So it's going to be like a very huge week, and this is what will determine the market direction in the coming week. NVIDIA is still on the 20th of November. Okay, so this is the the main driver of next week. We have to watch that very carefully. We also have the US election heating up, and we have another job report that's coming on Friday, which is an important one. So that's what's happening next week. The week after, we have the results of the US election on Tuesday, Fed meeting on Tuesday and Wednesday, the job report on Friday, and then the GDP data also next week. So the week after, or the first week of November, is going to be full of data. And then the week after, we have the inflation report of October. So as you can see, with all these political and economic news coming in, and the Middle East war, and many investors are trying to get out of the market now, and that's why we see the market is stagnating. Okay, so some investors are getting out. They're saying, I'm not gonna take this volatility. There is going to be a huge volatility in the coming couple of weeks. I don't want to be in the market while this volatility, even if it means that the market is going up, I don't want to be there. I don't want to take the risk that the results are bad and then I go down. I don't want to take the risk that there is something happening in the US election and I don't want to be there. Fed meetings the same, job report the same. So a lot of incidents, and that's why we are saying there gonna be a lot of volatility ahead. That's why I am recommending that you reduce your position. In the last couple of weeks, we were saying that you should be 100% in. Now I'm saying just try to reduce your position. If you are in a margin, get out of the margin. If you are 100% in, keep it, make it like 50% or even lower. So try to reduce your position because of these like fluctuation. If it happened that next week you've seen that Alphabet, for example, gave a good news, and then Microsoft then you can start to increase your position. But I expect that on Monday we'll have like many people liquidating, and then maybe after that in the week we will, if depending on the result, we'll see either people liquidating because they are afraid of results, or they are going to buy if the results are good. Okay, so watch out. That's very important week. We are going through a high volatility period, and it's very important that you manage your risk accordingly. Thank you very much. That will be it.